The election just a day away, Wall Street has been warming slowly to the idea that a Biden presidency would actually be bullish for stocks. There are strings attached. His victory would need to be accompanied by a blue wave for massive fiscal stimulus to go through. Let's bring in Nomura joint head of APAC Equity Research, Jim McCafferty, with us. Jim, great to have you. I'm not actually sure I buy into that because I feel like there is a sense that regardless of who wins this week, as long as we do get a result, that massive stimulus is on the way anyway. There's probably more of a question mark over further bond buying out of the Fed and what the potentially, inflation expectations would be. I want to ask you our question of the day. In a week as volatile and as uncertain as the one that we're starting to go into, what should investors be fearing the most?
I think another Trump presidency would mean further geopolitical tension for the next 4 to 5 years. And that means that it's very difficult for economies and investors to plan. So that's probably a worse outcome from a geopolitical point of view. For the U.S. domestic stock market is probably quite good because it means more tax cuts potentially and a business-friendly environment. But I think ultimately, if you take a 5-year view, I think a kind of resumption towards more of a normal world in terms of diplomatic relations with a Biden win is really the better outcome.
So unusually, we've not seen your usual havens really move that much, right? I'm thinking of the likes of the yen. When you take a look at the scope of FX, is really the recovery of China, what that means for emerging markets, maybe even the successful recovery stories in North Asia proving to be better destinations for haven buyers at this point?
Well, we think so. I mean, I think if we go out to 2021, if you look at what's happening in Asia over the course of the last few months, we see that the coronavirus appears to be under control. We have societies which are generally deferent to government decisions. And if you contrast that with what's happening in the West, specifically Europe and specifically the US, we're seeing society beginning to potentially break down. We're seeing civil unrest in places like France, for example. We're seeing protests in other geographies. And I think investors, when they look holistically, you look at Asia today compared to, let's say, Asia 25 years ago when we had the Asian financial crisis, for example. Countries in North Asia, especially China, Japan, Korea, Taiwan, they have very strong, what I would say, country balance sheets. They've got very strong fiscal positions. They don't need other countries to bail them out. So I think this time around, as investors look at the global equity landscape, our thinking is money should go to Asia. It's a safer place for money to be.
So what sectors in Asia would you go to? We have been talking for the longest time about the consumer side of things in China. And of course, we have Singles' Day coming up as well.
Well, I think the interesting thing for us is if you look at Asia, there is a real tech sector. Now, of course, if you look at the U.S., the market's kind of bifurcated. You've got these 5 big stocks led by, Facebook, Amazon, Apple, etc. But we've got similar stocks in Asia. And I think what's interesting is we've got Alibaba having results this week, and we've got revenue growth of 29%. So Asia has a kind of Asia version of what the U.S. has. And, of course, Europe doesn't really have a tech sector. So if you are positioning yourself for growth equities, there's not a lot in it in Europe. There are some decent consumer durable stocks, for example, but they're already quite expensive and the growth is more pedestrian. So if you're looking for growth at a reasonable price, then we think Asia is a good place to be, led by China, but also elsewhere in the region, including Japan and Korea and Taiwan.